What is going on, your average investor? Today we're going to be talking a little bit about Realty Corporation, why it's a great play to have inside of your portfolio, but also a little bit of caution as it has just been recognized by Jim Cramer as one of the securities that he would recommend. So, if that said, please subscribe, please help monetize the channel, please turn notifications on so when you get them you can like them and tell friends and family. So, Realty, pretty cool company. Overall, great from a technical standpoint, great from a financial and a fundamental standpoint. Some commonly known things about, the Realty Income Corporation, ticker O, is, these guys provide monthly dividends. Being a REIT, it does require that a significant majority goes back to the investors. As far as income is concerned, they do pay the monthly dividend. It's relatively rare among dividend-paying stocks, but for the REITs and for some of these real estate companies, they do pay them quite more regularly. This can be attractive for income-focused investors that need a steady cash flow. It could also be concerning because that does mean that the company is not taking any of these dividends and reinvesting them into the self to further future growth, but they're actually paying them out. So different strategies for different people. If you are one of the type of people that are looking for consistent income, might not be a bad thing. They do have reliable income as well. The company has a strong track record. They've been paying consistent dividends over the last 50 years, and they have a reputation for being reliable, income-generating investment. If you go to any major banks, Bank of America, Wells Fargo, I was talking to two of the brokers, and they were saying, a lot of people like to do that with some of their CDs. So even these bank tellers are picking up that these guys pay consistent dividends. Having something like this in your portfolio will absolutely diversify it. Realty Income basically is a diversified portfolio of commercial properties, so you guys don't have all your eggs in one basket with this. Properties are typically net leased, meaning that the tenants are responsible for the property expenses, which is nice. Things like maintenance, taxes, insurance, that's all passed on to the tenants of the property, so that reduces the operational risks and additional income that would have to go into doing some of these repairs, some of these taxes, things of that nature. High quality tenants. The company does a phenomenal job screening on who goes into the properties, as well as the financial stability of these tenants depending on the various sectors that they operate in. So this includes retail, drugstores, convenience stores, so on and so forth. So the diversification here also helps mitigate risk as they are in a variety of different retail or physical brick and mortar stores, but also the tenants that they have in there all carry strong or reputable credit worthiness. Business model, very, very strong. Their business model involves long-term net lease agreements. So in reality, this provides predictable, stable cash flow. That's why the company is consistently able to either pay out a dividend, increase their dividend, or give shareholders the opportunity to invest in the company and recognize these types of dividends. The company is also known for its disciplined acquisition strategy. They're just not going out there and buying anything. They have a very, very stringent and specific acquisition criteria that, if met, they can bring on new properties into the portfolio. Reputation, stability. They are often known as, the monthly dividend aristocrats company. They've built a strong reputation for stability and reliability in the dividend payments. These guys have done a great job being a conservative investor that's looking for steady incomes, outlet, or go-to. And finally, dividend growth. While the company's primary appeal is its reliable monthly dividends, it's also had a history of gradually increasing dividend time over time. So taking a look at the company from a purely fundamental standpoint, and now we're moving over to some of the technicals. If you guys look at these guys on a chart, moving nicely over the last 5 days. They have some peaks and troughs over here, hitting up to 63, but really just dropping down to that 61 range. If we're looking at it over the last 6 months, I'll wait for that chart to populate. I can probably pull it over on TradingView, which always has some great technical indicators over here. You guys can take a look at how the action looks. It looks like it's a solid buy across the board from a moving average standpoint. And if we look at some of the pivots, you can see that guys are putting the Fibonacci right around 54.5 to 57 on S2 or an S3. So on both the support and resistance charts, it's looking pretty nice in the middle. Now, the only thing that brings level of concern is there is the underground memes of the Jim Cramer phenomenon, and anytime he invests in something, the stock just absolutely goes sideways. So Jim Cramer recently, just about 2 days ago, said that he would recommend Realty. I guess we'll see what happens here now that he has put it into one of his stock recommendations. Typically, I mean, I think there's an entire ETF that just reverse trades whatever Jim Cramer recommends. Something to keep your eyes on, something to be aware of. But overall, I mean, great company. If you guys are looking for that stable, consistent income and not focused so much on growth, this might be one for you to check out. If you own any shares, let us know. We'd love to see what you got in at or what your average is on the position. And if you've had any thoughts about other real estate investment trusts or other things that are trading in that space or market, we'd love to know below. Comment and we'll get back to you in that section. Thanks for tuning in. Remember to subscribe and to turn on notifications so we can monetize this channel and start doing more giveaways.